welcome to the Mortgage Rate Weekly Market Update for the week of November 6, 2017. Hello, I'm John Thomas with Prime Residential Mortgage, here to give you an update. Well, last week was a good week for mortgage rates. They were able to move lower. Take a look at the bond chart on the screen. You can see mortgage rates had been moving higher as the bond had been selling off. But the previous week, we were able to hit a floor of support with a green candle there on the Friday. This past week, we were able to continue that rally and move higher and end the week with a green candle above a ceiling of resistance that is now a floor of support after the jobs report was released on Friday. So the technicals here are very good. We held support, we rallied, went through the ceiling of resistance, closed above that resistance. It's going to act as support now. And the technicals right now support a bond rally to continue, which means mortgage interest rates could continue to move slightly lower if the market rallies. So with that in mind, we're going to recommend floating your mortgage rate to start the week to see if we can build on this momentum that was started 2 weeks ago. Now, if we dig into the economic news, big news last week was the Federal Open Market Committee had met, and they did not increase the Fed funds rate. So they did not raise the Fed funds rate. But they did leave it open to look at it again in December to possibly raise the Fed funds rate in December. The other thing that they talked about was that inflation still remains low, which is bond-friendly news, and that the economy is doing good. And then we saw the jobs report come out on Friday for October 2017. It showed 261,000 jobs were created. Now that was well below expectations of 325,000 jobs, so not a great report. Now, the unemployment rate did drop from 4.2 to 4.1%, but if you dig into that, that wasn't because people were going back to work. It's because 765,000 people dropped out of the workforce, no longer counted in the number. That's why the unemployment rate dropped to 4.1%. So the bond market was most helped by the measure of wage inflation or wage growth. The hourly average earning dropped from 2.7 to 2.4%. which means we don't have any wage growth inflation at all. That was bond-friendly news. Not good for people's paychecks, but bond-friendly news that helped the bond rally on Friday to close above resistance. Now, we also saw a measure of inflation last week. The Fed's favorite measure of inflation is the personal consumption expenditure, or the PCE for short. The PCE for September remained the same at 0.1%. And year over year, the core PCE is only 1.3%. That's well below the Fed target of 2%. So no matter what the Fed does, they're trying to kick in inflation. It's just not working. We still have persistent low inflation, which is mortgage bond friendly, so it is good for mortgage rates. Then we saw weekly initial jobless claims come out on Thursday. They dropped 5,000 claims to 229,000 claims for the week. The jobless claims continue to drop after rebounding from the spike up in the hurricanes in Texas and Florida. So very good news on initial jobless claims. They remain very low, well below the 300,000 mark, which is healthy. In housing news, we did see the CaseShiller home price index for August 2017 showed that home prices were up 5.9% year over year. That's 0.1% higher than the July reading of 5.8%. So again, low inventory is helping push up home prices. We are predicting home prices continue to appreciate throughout the rest of this year and into the next year because we have this persistent low inventory. Now, in the local news, the next first-time homebuyer seminar is Wednesday, November 15th from 6 p.m. to 8 p.m. That is in Wilmington, Delaware at the Independence Mall, 1601 Concord Pike. And then we have one in Newark, Delaware on Saturday, November 18th at the Christiana Hilton Hotel from 10 a.m. to noon. And then the next one in Dover is Saturday, December 9th at the Dover Holiday Inn from 10 a.m. to noon. So if you want to register for either one of those seminars, give us a call, 302-703-0727, or visit us online, www.delawarehomebuyerSeminar.com. Look forward to seeing you guys next week.